do you want to give me a little bit of background of how you've become so fluent with it?
Yeah, absolutely, man. So everyone that or tunes into my live streams in the morning know that psychology and mistakes and discussing that is one of my favorite things. So a little bit of background about that is when I came into the market, I was just, I was just like everyone else, just make the same mistakes over and over again. Well, about a year after I first really started trading, I met my wife, and who was an Olympian, or two-time Olympian, and she is now a performance and mental training coach. So after many conversations with her about, really just trying to understand myself and understand why I was making those same mistakes, it was just kept becoming a conversation over and over and over again about these errors and how much, losing was taking power over my life. So, I would go golf or I would go fish, some of my hobbies that I enjoyed doing. And if I was failing at those, I was noticing a lot of the same emotions that would come up in golf and trading. And, I would fish a tournament and I would lose, or a mistake would happen. I wouldn't see something that thought I would. And I would start to really see and think about these things as they developed. I would see how pretty much all the same mistakes that I'm making and all the emotions that are generated from that were really tied down to who I am as a person and who I am at my core. So overall, that's kind of how I started to really, really start to think about losses and risk management and psychology of trading, because it helped me understanding when I could apply it to everyday situations such as golf, such as fishing, or another hobby that I may enjoy. So that relatability and that interrelatability really helped me to go on this self-discovery process and become a better trader and manager of my emotions.
Now, a lot of people have the same mindset as you. However, um, a lot of traders know the emotional mistakes that they go through day in, day out. And knowing this, they still can't seem to stop the mistakes from reoccurring, even though they know going into a trade what I'm doing is incorrect.
Yep.
Emotion takes over. How do you stop that from occurring?
That's a good question. So I don't. I am never seeking to eliminate my mistakes. I'm just seeking to reduce the frequency of those mistakes. I know that I'm never going to eliminate them. And for instance, just last week, I took a huge loss. And as I was taking that loss and as I was taking that trade, I knew that every action that I was taking was wrong. So when I was evaluating that, and I was looking at that loss at the end of business, I thought to myself, and now I think to myself, it's not about, okay, can I eliminate this 100%? Because I know I never will. I know that mistake will reoccur at some point in time in the future. But what is important to me is decreasing the frequency between those big mistakes. So if I had that mistake, which I did, I think it was on Tuesday or Wednesday, I look back and it had been, 6 months to a year since that had occurred. Prior to that period in time, it was occurring almost monthly. So for me, when I'm looking at mistakes, and like when you were talking at the very beginning here about compounding errors, um, it isn't about eliminating, it's about jotting those down and saying, okay, I made this mistake yesterday. And my number one rule is, if I make a mistake, if I break a rule, if I break part of my system, I don't care what happens the next day. The only thing I'm focused on the next day is not making that same mistake again. So I don't try and eliminate everything. I don't try and think about all the possible things that could go wrong, or what I need to work on. So going back to golf, one of the things that is important in having a good golf swing is they call it a swing thought. You think about one thing. You think about one thing that you're going to do well in that swing. And that's the same thing when I go into the next trading day. It's like, if I made a mistake, I want to improve upon that. And I don't care if I made a different mistake the day before, I'm only focusing on that mistake that I made the prior day. And then in my journaling process, I can see how frequently that's occurring. And if it's occurring really frequently, then, and I'll allude to here in a minute, there's a deeper issue at play. A lot of people just say, I was greedy or I was fearful or I didn't want to lose this money. But at the end of the day, those are just surface level mistakes. And those are just excuses. There's an onion here, and you're just saying that it's greed and fear because you read it in some psychology book. But what really is occurring is underneath that surface level issue, there are, things that, could have happened a week ago, a month ago. There's personal issues. There's all these different things happening. So if you can start to see that these reoccurring mistakes and you can't eliminate them, then you have to dig deeper to see, okay, what is the root cause here? And so some of the bigger mistakes of the past I made, I was going through, and that was how I was resolving those issues. Just peeling back the onion and making sure that I wasn't making the same mistake over and over again.
Gotcha. So what I'm noticing is you're focusing on a singular mistake at a time rather than the whole pot at once.
Exactly. Exactly. So for instance, there's see, whenever it was Tuesday, I took that loss. One of the things that just applying this to what happened last week and how I went about it. The mistake for me is I was taking this trade that a setup that required confirmation, and not to get setup specific, it just simply required that I wait a little bit longer. But during that time, I knew that I was feeling antsy. I knew I was feeling, excited. I want to get into that trade. So I took the trade and immediately dumped on me. And then I didn't manage risk. So there was two mistakes at play here. One is early entry, and two is managing risk. Well, for me, those are two different mistakes. I'm not going to focus on both of those and resolving both of those. I'm focusing on one. So the one that I was focused on was the early entry. And why was that? So I thought for 2 or 3 hours, journaled, and peeled back. And the reason being, for me personally, it wasn't because of greed or it wasn't because of FOMO. Those are just excuses. The issue was I had this thing, and this is a personal thing to me, that on the first day of the month or the first day of the quarter or first day of the year, I really want to push. And so it was July 1st. I pushed, and now I know that's a weakness. I know that's a weakness of mine. So come August 1st, that's what I'm going to be focused on, is not making that same mistake I did on July 1st. And because I know that the beginning of months, beginning of quarters, and beginning of years are a weakness and a vulnerability to me. And I couldn't have gotten there if I would have just said, oh, it's FOMO, or oh, it's a mistake. No, it's an onion and a layer of problems, and focusing on that one mistake helped me the next day, and then it will also help me the next month on the first day of the month.
So it seems like the first step is taking responsibility.
100%, 100%. Owning it, owning that you're always going to make mistakes, that you're going to continue to make mistakes, and just accepting that. But you should never make, I should not, I will not, and that's the thing, is reframing it and changing your language. I will not make that same mistake on August 1st. Like, I can promise you that. I have my note here on my desk about the mistakes that I've made this past month. I will not make that same mistake August 1st. Now, I may make 5 other mistakes, but I will not make that one mistake.
Gotcha. But digging deeper into that, now there's on the spectrum, people are either way too scared to enter a trade or way too excited to enter a trade. Now,
Yep.
while you're trying to improve upon the mistake that you did on July 1st, how do you prevent that from translating into becoming fearful of entering new positions?
Yeah, that's a great question. Yeah, because you're exactly right. You could go swing too far to the opposite side. So, for me, I always have to, and I always do believe in the next trade. So I believe that no matter what happens, the next trade that I take will be a winner. Okay, so if you are fearful, and there's reasons behind that. If I were to take one share of SPY that moves like what 10 cents, 20 cents every 5 minutes, whatever it is, one share of that is going to move what, a buck, 10 cents, something like that. It's back to an excuse. It's back to an issue at hand that is not the real issue. Because if you take one share of SPY, or if I take one share of SPY after making that same mistake, I don't feel that. I'm not scared of losing or taking a trade when a dollar's on the line or 10 cents is on the line. The problem becomes is if I were to take 1,000 shares of SPY after a huge loss, then I become more susceptible to that issue of not taking the trade. So for me, if I've had a loss, and I am worried and concerned about the financial issue of losing more money, which is inherently why you would be scared in the first place, then I just go all the way, even to today. I will go all the way back down and make like $5, $7, $10. It doesn't matter. As long as I'm seeing green and just getting the momentum back in my side, that's how I avoid go swinging way too far. Because even when I first started, I never paper traded. I always just threw money, lost money because that's just my personality. So even today, if I'm trying a new strategy, if I'm losing money, I just scale things back. I take one contract, and if one contract's swinging too much, I'll take one share of Facebook or Tesla or Amazon or whatever. So I'm never afraid because I'll always just scale it back to the point to where there is no pain. There is no potential pain. So if you are, going back to your question, is if you are struggling with that, then find something that is completely a non-event. Like you could buy one share of SPY and your computer shuts down for 2 weeks and you could never access your brokerage account. You're probably going to lose or make $10, $15. It doesn't matter. So once you get to that point, then it's the mechanics behind mistake uh, rectification and figuring out those mistakes and fixing them and stop worrying about the money and making money or losing money. So that's how I manage even to today manage those swings from too scared to too excited to get into a trade. I got to find that sweet spot and then I can scale it up. And it's always kind of like a pendulum for me because I went on a 9 day winning streak, a really nice 9 day winning streak up to that losing trade. So the pendulum was all the way over on risk on. And I'm not just going to jump immediately back onto risk on after taking a big loss. So that's kind of how I do it.
Gotcha. Now, the whole market psychology, we're going to touch back up on
Yes.
that again. But before we do that, I want you to go ahead and just explain your trading style.
Yeah. And you don't mind if I share my screen?
Not at all. Not at all.
Okay, that way it'll help some folks. So basically, the way I look at and I have some notes here. The way I look at my trading style and understanding markets is breaking it down into three things, and it's how markets and auctions function from a theoretical level, how to analyze the market, and then the psychology and risk management of your trading. So for me, I graduated from university in finance. I understood how markets worked. I understood the theory of them. So I checked that box. A lot of people that jump in, they don't understand what a bid and ask is. They don't understand the auction, so they're already handicapped. Then they jump straight into number two, which is analyzing the market, trend lines, moving averages, everything that people are familiar with. So they miss the first step. So for me, my trading style is understanding how markets function and then having a method of analyzing them. So I know for you, you use the golden trigger method, and that's how you can structure your trading and you can structure your framing the market and your trading style. So for me, I use what's called volume profile. It's a huge component of my system, and I use supply and demand. So I use some other things, chart patterns, trend lines, everything that people are familiar with, but I'm not going to go into those right now because you guys, it's probably something that you've heard of, and you could see me talk about them on Twitter. So what I'll do is I'll go in, show you a few examples. We'll go over a few examples that are occurring in the market right now, which are PLTR, Wish, and XPEV. And I'll show you how I used to look at markets and then how I look at markets now. And please, as I'm going through this, keep in mind the framework at which I said understanding the market in threes, which is understanding the auction, analyzing and framing the market, and then the psychology point we've already talked about. So let me jump into this real fast and let's see here. Okay. Let me see if you can see my screen. 1 second. All right. Screen. Sorry about this, guys. Here we go. Okay, can you see my screen?
Yeah, let me click into it right now.
Okay, you got it.
Yes, sir. Go ahead.
All right. So we'll go over three examples. Like I said, PLTR, Wish, and XPEV. I use multiple things other than volume profile, but I want to talk about that because since that's the core component of my strategy. So most of you guys are familiar with moving averages. And if you're not, you can look at it's just an average of the price over a certain amount of days. So this is and I just picked common moving averages, the 9, the 21, and the 50. So a lot of people trade. Can you see me drawn on my screen, by the way?
Yeah, yeah, everything's good.
Okay, okay, cool, cool. So a lot of people look at this, it's a bull flag, you get a moving average crossover, all is good, right? So, and again, I do trade these patterns, but it has to line up with volume and supply and demand. So going back to the first component of understanding markets, which is understanding how the auction works, is understanding that supply and demand is what drives the market. So everything else is a great tool to use to be able to guide your thinking, such as moving averages, indicators, and other things. But at the end of the day, it's all driven by supply and demand and emotions of the participants. So let's take this Wish, for instance, since it was really popular last week, and this is one that I tweeted about. So everyone was looking at this, and then the 15 break. Okay, so uh,
Sorry to interrupt you there, but it's actually great because Wish was one of the positions we lost in this week, and I noticed when it was at 15, before the market even closed, you gave updates about how if price doesn't hold a specific volume profile, that you're just expecting a dump, and sure enough, that exact week, it was
it,
all you.
Exactly. Yep. And that's the beauty in this because here's the way I traded this was I did trade this bull flag. This is a pattern that I trade. And like I said, I use traditional technical analysis to trade these, and it was a nice little move. I took options somewhere in here and then sold 80% up into here, so going back to my strategy, it's understanding how the market works. There is consolidation here, and then you will see this being bid out of this little zone and it pushes up. So my trading setup was this little bull flag, but I knew the core component of my strategy, supply and demand and volume profile, was about to come into play in a huge way. So this is a screen without volume profile, and this is the screen with volume profile. Okay. So what you're seeing here is, if you're not familiar with it, let me crank up the opacity where you can see this a little bit clearer. What you are looking at is what some people call volume by price, and it's basically just showing you these gray histograms are the volume that was transacted at a certain price. So this level here at 1384, you can take that and you can say that this 1384 is where the most volume was done on this chart. So what does that mean and why is that important to me? Because of supply and demand. I know that this volume was transacted in this period here. So what we have is people buying this dip and they become underwater during this time. So in like anything else in life, and back to what George you were talking about earlier, is relating it back to real life or hobbies or something like that, is we always want to reduce pain as human beings. So if you're underwater in your position here, what are you going to do whenever it comes back to whenever the pain has subsided? You're going to want to reduce that pain. So we have a lot of emotional bag holders in this area. What volume profile does is quantifiably and systematically shows me that zone all the time. Okay, so when we were coming up into this price, everyone was expecting it to break over. But what was happening is this supply right here, which is what this indicates, was too great for the buyers that were trying to push it up. Anytime supply is greater than demand, you're going to have a decrease in price, okay? So if you look back at the second screen that I was just on, all the moving averages were pointing up. It looked really good for a breakout. But if you look at the volume profile, you can see we're running right into an emotional area at which is, if it cannot clear, you're going to see a decrease in price. One, because supply is too strong, and number two is because anyone who tried to buy this breakout that did not cut, okay, that did not manage the risk, and George, you said, you had a losing trade. Losing trades are fine. You managed your risk, you move on with your life. But the people that didn't manage their risk, there's going to come a point in time, at some point in time in here, that they are going to feel max pain. And when that aggregate of participants feels max pain, you're going to see this substantial decrease in price here. So the going back to my understanding markets in threes, it's understanding how the the auction works. I know that supply and demand drives markets, not moving averages, and I have nothing against moving averages. I use them, but they don't drive markets. Supply and demand and volume drive markets. Number two is how to analyze the market. So I'm using this volume profile to frame and analyze the market. So I knew that X or Wish was a no-go touch for me until we could clear this supply. Once you clear supply, demand can increase, thus driving the price up. Until then, in my strategy and how I trade, it's a low probability bet for me, so I'm not going to place it. So last point on this, number three in this is the psychology and risk management. Like we were just referring to just a minute ago, how do I link the psychology of this trade? Well, I know it's a low probability bet. Everything in me wants to take this trade long on the breakout here. Everything. I'm looking at FinTwit, I'm looking at the moving averages. Everything's telling me to, but I know that I have to control myself because according to my system and the way that I trade, the volume profile is telling me no and telling me that it's a low probability bet. And sure enough, we fade it off. So those are the three core components of how I look at markets and how I trade regardless of what time frame, small time frame to all the way to investing. Supply and demand is the fundamental component of my trading style.
Now, I noticed that you love to use volume by price to determine whether a breakout is gonna go through or fail. But do you want to explain if you've ever used volume by price to um, capture a trade on the way down for a reversal?
Absolutely. So I'll go over one of my favorites, which is PLTR. Um, so a lot of and anyone who's followed me since March knows that the volume profile was what kept me out of PLTR while everyone was, and again, I want to preface, I lose all the time. These are just three hand-picked examples, guys. So like I'm just trying to show these because they're fresh and they just happen to, exemplify volume profile well. There's tons of times when it fails and it's just and you'll see it. Basically, it would be like PLTR right now, completely falling, and it happens all the time. There's no perfect strategy, so I want to emphasize that on the front end. But these are good examples to really illustrate the power of supply and demand. So going back to your question is how did I use this to catch a move in PLTR? So I stayed out of PLTR during this whole time except an add to my position account down in the 19 and 20 areas down here, which was into this volume node. It wasn't a big one, but this was enough for me to add down in this area here. So the way I used it recently is I didn't buy, let me zoom in here. I'll show you this. So here's the volume node. There's the volume node, okay? So everyone was looking at this breakout right here. Stuffed, 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 stuffed. So I waited as we were coming up into this area. As we were coming up into this, I was watching it every day. We could never close over this. So as soon as we reclaimed right here and we held, this is where I got an add. Now this is my position account, which I do a lot of position trading. So this isn't a day trade or a swing trade, but you can see how, regardless of what time frame you're looking at, that tradable setup is what I was waiting for. So back to understanding the auction, I knew that there was supply here, no go. When supply gets overcome, demand will come in more than likely. So I can take this trade with a tight stop, and then I can, however you want, however you look to sell, I just sell into key resistance if it's an active trade. But this is a position trade, and look at where we're at now, right? So I'm going to be watching this next week because we're right back here to where the buyer should step up. If they don't, then what do we think is going to happen? Probably something like that. If they do, then we can continue for the next leg up. So this is a recent trade I took in PLTR using the volume profile as the setup. So
Gotcha.
that,
Beautiful.
yep. And if real quick, I'll run through these other two, and then we can move on to the next topic. Just to on the volume profile, do you mind
Yeah,
the
take your
X?
time. Take your time.
So I'll show you this XPEV. This is one that it kept me out of a trade, right? So you got a beautiful 20 moving average curling up. You got a nice little flag breakout, and you got a little flat top breakout, which a lot of people like to trade. But we were running right into this volume node, so there was no trade here for me. So I tweeted 3 weeks ago, 2 weeks ago, that a big part of my system in using volume profile is not that it gets me in trades, but it keeps me out of bad trades. This is a great example because look at this. You have the nice moving averages, you have a 3 bar pattern, and you have a little breakout, right? This looks really, really good, guys. This is a great trade that I love to take, right? It's a little flag pattern, just basic technical analysis 101 above the moving averages, but we're running right into this huge supply zone here. So there is no trade for me. So that's one example. Again, probably half the time volume profile is used to help me stay out of bad trades, not just to get in good trades. So that's one example. And then the last one was, oh, that's it. So XPEV, Wish, and PLTR are the examples of trades recently that I used volume profile to make trading decisions off or make or to keep me out of trade. So again, that's the core component of my strategy is analyzing supply and demand using volume profile.
Now, is volume profile something you've always used, or is it something that you've recently adapted?
That's a really good question. So, like I alluded to earlier, I took the mindset of just jumping into markets and losing money. And again, I'm not advocating that, but that's just the way that I had to personally do it. So, I would say over the past year is when I really started getting into supply, demand, and volume profile trading. I've tried uh, hundreds of different things, and I'm still working out kinks in my shorter term trading strategy. So, a little aside, I was a believer in finding something that worked that could support me in looking at figuring out how to swing trade, how to day trade, how to ride options. So, I have multiple strategies going. And for me, when I first started out, it was position trading and making money that way. And that way I could build up other strategies along the way. So, over the past year, I would say is when I really started using volume profile as probably the principal component in my trading strategy.
So, you're working on furthering other strategies as
Yeah.
you're trading. So you don't
Yes.
have a set strategy.
Let me back up here. I'm working on, actually, this is a great example. So, historically, my day trading has underperformed. That is something a lot of people stick to one thing, and that's what they do. They're either a swing trader, an investor, position trader, option rider, whatever it may be. But for me, for good, better, or worse, I want to be able to do a multitude of things. So, what I did was I found success in position trading using similar principles, but in understanding that my day trading was historically weak, I wanted to improve that. I wanted to test and figure out what worked for me. So, for instance, did I want to be a breakout day trade buyer? Did I want to be a pull-in day trade buyer? How did I want to day trade? What time frames do I want to use? So, to your question, it's not so much strategy. I'm using the same strategy across everything, but it's time frame and hold time. So, day trading versus swing trading versus position trading. I'm using the same strategy, but it isn't for me, one of my weaknesses is making quick decisions on smaller term time frame charts. I know that. And one of my strengths is making larger macro analysis, such as looking at the 1 year, 1 day profile and making decisions off that. So, what I've done over the past 6 to 8 months is start to really work on my day trading, and any losses that I incur are offset by something that's already sound and making me money, which is my position trading.
I see. Now, I see that you're constantly adding new things in order in to your arsenal.
Yes.
Now, a lot of traders will attempt to do that. Obviously, you're very well educated, very well spoken, and you have a great background for the market. However, a lot of traders will get into that and try to enhance their trading, but end up instead blinding themselves with abundance of indicators. How are you
Yep.
avoiding that?
That's a great question, and I've done that. I've made every mistake that everyone could possibly imagine. I've had every indicator, and every possible thing. But for the way that I'm avoiding it is keeping the core component of trading, or my system, which is supply and demand and volume profile that can be applied over any time frame. So the way that I'm avoiding it is if I'm day trading, I'm not adding in MACD or RSI or a moving average or moving average crossover. I'm using the same component and same core component, which is the volume profile, to make those trading decisions. So again, I'm not advocating it's probably the wrong way. I've lost a ton of money doing this, but it's how I personally in my journey have to go about understanding markets and how I have to go about trading markets. I don't want to be a one trick pony and just be a momentum breakout buyer in growth names. I don't want to do that. I want to be able to trade every market, consolidation, trending, bearish. I want to be able to, sell options, ride options, but it takes much more time. So, to your point, is if I were new and I hadn't had any experience under my belt, this would be the wrong way to go about it. But one of the points I was going to make is you have to know yourself in trading. And I know that I can't sit sidelined in a bear market. I know I can't sit sidelined in a sideways market. I want to be trading and I want to be active. A lot of people disagree. A lot of people in the growth when the growth got hit, they just sidelined their cash, right? I don't want to do that. I want to find where I can put my money, where I can make money constantly. And so that's the development that I had to go on. It's not for everyone. People disagree with it, and that's fine. That's the beautiful thing. You can disagree, and we can all still make money, but it's just the journey that I've had to go on. And it led me to framing markets with volume profile across all time frames and all strategies.
Gotcha. Now, diving a little bit further into the risk management aspect, a lot of FinTwit accounts will preach risk management, but no one will ever truly dive into, for example, how they manage their risk. Do you want to give a few tips for some viewers?
Yeah, absolutely. So, uh, regardless of what time frame I'm trading, whether it's position trading, swing trading, or day trading, in all accounts are different sizes. I'm never risking more than 1% of my account. I've never blown up an account to the point where it's just been like, I take four trades and my account has been, completely wiped out. Now, I've slowly dwindled my account down when I was first starting out, but risk management has always been important to me because I I understand that I don't want to lose more than 1% of my account. So there is no secret sauce. There is no, once you set that limit, it's either you adhere to it or you don't. So for me, 1%, it doesn't matter what happens during the day, whether even on that bad day that I was trading, I'm not risking more than 1% of my, capital in the market. So uh, I always say we are humans, if us that are on this interview, if you're listening in, you're not a bad risk manager or you wouldn't be here. You don't run red lights because of the danger. You wear your seatbelt more than likely because of the danger. You can manage those risks. But when you get into markets, a lot of things happen and you have these psychological and emotional issues that you don't have in real life. So for me, understanding that and being able to understand that I am a good risk manager, and all I have to do is just say 1% of my capital, my at-risk capital total, is all that I'm willing to risk maximum, no matter what happens. It has always kept me in check. So for me, there is no secret sauce. It's just I've always adhered to that because I know the ramifications of not adhering to that.
Now, you just mentioned that your account, you will not take four trades and blow up your account. A lot of the
Yep.
times I see traders get a little bit emotional after a few losses, and then they switch their mindset to, okay, I'm just gonna put in the biggest position I have in order to recoup where I was at and end up, striking that final blow to their account.
Yep.
How do you prevent, or how would you give tips to newer traders to prevent from falling into that pit of despair right there?
Yeah, that's a great question. Because I fall into the revenge trading. Sometimes, again, it doesn't happen as frequently for me, but I always tell, I have some buddies I trade with and we talk about is there is no, like, if you're going to make that decision, right? Like if you have already committed to making that decision that you're about to take on your entire account after three losses, that isn't a risk management issue. That's a personal issue that you're going to have to work out as you develop in this journey. There is no indicator or there's no secret sauce or rule because you can have rules, but you're going to break them in the heat of that moment. So I've made the mistakes, and like I said at the beginning, is if you make that mistake and you blow up your account, then you can't just say I'm not going to make this mistake again because you might. What you can say is I'm going to decrease the frequency of this. The only absolute way of eliminating that type of issue is decreasing account size. So if you have $10,000 account and you know your weakness is doing what you just said, then don't put $10,000 in there, right? Like if you have to know yourself, that's the most important thing because if you say I'm susceptible to putting on this kind of risk after a loss, but I'm going to write on a sticky note, don't put on that risk after a loss. The sticky note's going to do you no good. You have to have some kind of parameters to protect yourself against yourself. So I have never struggled with that. I've always understood that if I do that, I have a wife and we have a house. Like there's catastrophic things that are at play for me. That pain of doing that one mistake is greater than actually committing that mistake. So, when you look at it that way, it's like you don't make mistakes that have catastrophic damages, right? Like going back to the red light, you're not going to blow through a red light going 90 miles per hour into oncoming traffic just because you said, oh, it's a mistake. Because the damages done there are too significant for you to handle. So, what you're saying by putting on that risk is that this damage that I'm about to do is not significant enough to keep me from doing it. So that's for me, it's just been so significant and so overwhelming that I haven't had that issue to put on that kind of risk. For somebody that does have that issue, they have to know themselves and they have to accept who they are and they can work on that, but put safeguards in place from yourself, whatever that may be. So that's the only advice I could say is you got to protect yourself from yourself. But before you can protect yourself, you have to understand yourself, and that's through peeling back that onion and really diving into who you are as a person before you get into capital markets.
Gotcha. Now, going back on something you said previously, your it seems that your trading style and your mindset is constantly, foot on the gas, and you're eager to take a trade and all that good stuff. And on the other side of the spectrum, when I have troubles in the market, I'm a firm believer in taking a week or two off just to reset your mindset. Now, do you ever feel that way?
100%, 100%. It doesn't matter. I took a couple of days off. I didn't really do much last week after that big loss. I just wasn't seeing the market. So although I want to be in the markets, whether it's consolidation, bearish market, or bullish market, and I do personally believe that I can trade those, there's just some times that for whatever reason I'm losing. And I'd go from like a 68, 70% win rate to a 15% win rate, and I'm not seeing it. The evidence is there. I'm not seeing it. It's time to pack it up, take a break, just relax. So absolutely, it doesn't matter what's going on. But back to what I was talking about earlier is all the while I'm taking a break, I still have my position accounts working for me, right? So that's why I wanted to develop multiple strategies because if my day trading is horrible, then I can move, I'm leaning into my position trading. If we have a huge pull in the market and my position account takes a hit, I can lean into my day trading. So I'm not always putting my foot on the gas, but I always have some kind of exposure to the market. And if I have to step away from active trading, then I still know that my exposure in the market is good, which is long term where I want to be. So that's how mentally I can take a break, step back from the markets, go on a vacation, do something whenever I'm not seeing the market actively, whenever I'm not seeing it well. That's essentially what I do. So you're absolutely right. I take if I'm not seeing it, I get the heck out of Dodge, man.
Now, you're saying if you don't see it, you don't trade, but have you ever had a moment where, the trades might be there or the market is trending well, but, you know, in here you just don't want to trade, or there's a roadblock, or there might be a little bit of stress you're trying to relieve. Do you ever take breaks off the market in those cases, or is it solely based off of the market's performance at the time?
Oh, absolutely. That's a really good question. Yeah, I do take if I'm not if let's say I'm on a win streak or nothing is really going bad in the markets, yeah, there's some days I just wake up and I don't even really feel like trading, and I think that's a lot of the a huge misconception, and it's pushed a lot on FinTwit and a lot in the media, and you see everyone making money, and it always looks like a joy. It always, looks fun. I'm huge about transparency on my Twitter. I talk about my losses. I talk about my mistakes. I talk about where I suck. And I love that. And it's the same way here. It's not always, a walk in the park. Some days I get up and I'm like, I really don't want to trade today. I do not want to trade today. And sometimes I do it and then I probably am going to lose that day. But sometimes I honor it and I'll go play golf or I'll go do something else. But the reality is it's like anything else in life is it's not all sunshine and rainbows. It's like some days, I don't even want to get out of bed, even if I'm on a win streak. And it's I think that's just human nature. But again, this all goes back to you understanding yourself and understanding who you are as a person because for me, I know now that I have to take a step back and take a breather. Or I'm going to, my mental health is going to deteriorate, and then that's leading to me not working out or exercising or eating right or whatever it may be. And it's just a downhill, slow grind down if you're not taking care of yourself and kind of honoring what it is that you are feeling. So absolutely, man, I'm a huge proponent of, it isn't all, you know, happy go lucky all the time. It just isn't. And anyone who tells you that it's going to be you are your own boss. Everything's exciting. There's going to be days where it just flat out sucks, whether you're making money or not.
Gotcha. Now, I think I hammered you enough with emotional questions regarding the market. We
Yep.
would love to get a short-term and long-term outlook on either, select ETFs, the market, or, one or two tickers that you're in favor of.
Yep. Okay. So can you are you still looking at my
Yeah.
stock screen? Okay. Okay. Um, okay. So, I mean, let me flip back over here. Let's just do this real fast. So, I mean, here's the deal. So short term, I mean, we'll just take the SPY for instance. Short term, I mean, I can't help but be a little in the mean reversion mindset. So one of the moving averages that I use is just the 20 moving average. So let's just look at this from a technical perspective real fast. Um, we're pulling away from it on the daily chart. We look at the weekly, we're pulling away from it on the weekly chart. You look at the monthly, you're really pulled away from it. So short term, I'm expecting some kind of mean reversion. I mean, we've seen it, all the time. You get up, you pull back, you get up, pull back, pull back. It's just happens over and over again. So that's kind of what I'm expecting in the short term. But long term, I mean, anyone who's fighting this market, it's crazy. I mean, this is who cares at the end of the day whether the monthly is all the way up here, right? I mean, people were saying that here, here, and here. I mean, until we get some kind of crack, there's no reason for me to be medium to long term bearish. I mean, I'm expecting mean reversions in the short term, but I mean, all these doomsday guys, I just don't understand it. Like, just get on board the ship and let's rock, right? So, short term. Mean reversion, long term, just still just this macro bullish trend. Whenever it cracks, and it may, I don't know what's going to happen. We didn't know what was going to happen with the coronavirus stuff, right? But I want to show you guys this. If you look back, the coronavirus, right? Like you don't have to be the guy that's guessing the top, right? Like I mean, there's clear signs that something is afoot here, right? Massive sell volume, breaking the 20 after it's been trending above the 20. If you don't realize it here, you start breaking these and putting in lower lows, the writing's on the wall. But until we get that, I'm just still thinking, macro bull market, short-term mean reversion. So that's what I'm thinking on the SPY. Same thing with the triple Qs. Uh, if you look, I mean, it's a similar story here. You just got this, move up. We were pulling away from the 20. Same thing. Once you pull away from the 20, you get these mean reversions back. But it's just putting in constant higher lows and higher highs. And then RTY looks really good for a breakout potentially uh, here soon, which is the small caps. I mean, it's just been consolidating in this range. So a lot of people say that, we gotta pay attention to all these markets in correlation to one another. And I agree. And, you look at this and it's just consolidating. So if this starts to break this consolidation, this goes back to my volume profile theory. All these people up here are going to be trapped. It's showing that this was distribution. If we crack this, then that's showing that distribution is resolving to the downside, which more than likely means we're in for some trouble. But if this resolves to the upside, this is just a huge consolidation for a next leg higher on small caps. And if the small caps are running, then the market's healthy. And then last YM, which is the Dow, same thing. The old is probably as old as the Dow itself is the Dow theory, which if you haven't heard of it, you can go look at it. But it's basically talking about some argue whether it's still relevant today or not. I say it is. But without the Dow, that we're not seeing any kind of cracks in the market, just more accumulation. And if it resolves up, that's accumulation, and these contraction periods lead to expansion periods, whether one way or the other. So again, if you're not trading this actively, you can just watch these higher lows and these consolidations take place to see whether it's accumulation or distribution, which boils back to where we started with supply and demand. If this is accumulation, you get the break. I'm expecting more upside. If it's distribution, we get the break. I'm expecting downside. But either way, I just react, but I'm not going to uh, guess about when we're going to put in a market top. Because, again, like I say, I have no shame in admitting my losses. And the one time that I made this mistake was a few years ago. It might have been actually last year. Yeah, maybe it was here, somewhere in here. I was saying I was overly bearish, and I would say, "Oh, this is a market top. Oh, this is a market top," and I've lost more money on predicting market tops than I care to imagine or care to admit. So I don't even do it anymore. So macro bullish, micro a little overheated, looking for some mean reversion.
Gotcha, man. Well, I mean, that was everything right there. I just wanted to thank you so much for your time. You are a fantastic trader. I tune into your morning streams every day and know that this kind of explanation is something that you actually do on a consistently daily basis for your viewers. You give your outlook. A lot of traders, including myself, are just reaction based traders where we're just going based off of price at the given time. But you're over there, giving your predictions and how you're going to play each possible scenario before the market even opens. So, again, a huge value to the FinTwit community, really underfollowed just because people don't want to take the time to tune into a stream and expand their knowledge a little bit more. Do you have anything you wanna, your social medias, any websites you wanna?
Yeah, no. And first of all, before I get into that, I just want to thank you, George, for having me on. It's been a pleasure. I love talking about, I honestly, the biggest thing I love talking about the most is the psychology and talking about losses and because it's just if more people talked about losses in psychology, that the issues behind that would lose the power over you. That's been a huge thing. So getting on these platforms, live streams and interviews and just talking about it, hopefully it helps people understand that losses are okay, making mistakes are okay. And it's just a personal journey. So I want to thank you for having me on, and then also, having, what you're going to be doing in the future of allowing people to be exposed to these different mindsets. So that kudos for you, man. I really appreciate it. And then as far as my social media goes, I got Twitter and YouTube. You can follow me on Twitter at DavisTrades. And then YouTube, I same thing, Davis Trades, where I do a pre-market live stream. So I'm looking to get a little bit more active on YouTube and posting some different videos. So stay tuned for that. But I do post a lot on Twitter and then go live every morning.
And I'll have all your social media linked in the description on my YouTube channel below, so members can access it a little bit easier.
Awesome, George, man. I really appreciate it. And again, a great thing what you're doing is just getting eyes on, like, and traders that have been there and taken losses, and just seeing that it isn't, and great questions, man. Great, like, it isn't just a walk in the park all the time. And I think I love the transparency of a lot of people on FinTwit, that just share that it isn't always fantastic, and losses happen, mistakes happen. So I appreciate you giving me the opportunity to discuss that, man.
Of course, man. I'm like any other one of your followers. I'm here to learn as well. I have no ego whatsoever. The wish trade that you went ahead and explained, after the loss was taken, I went back to your feed, studied your volume profiles and understood the trade a little bit better. I have something to learn each and every single day, and that's a big reason why I'm interviewing, experienced traders such as yourself.
Absolutely, man. I appreciate it, George. I really do.
Thanks, man. You have a great day, and thanks again for taking your time to interview with us.
All right, buddy. Good luck next week.